Scott Bessent's former mentor is now blasting the US Treasury Secretary approach to calming the bond market. It's Stanley Druckenmiller, who says the plan to increase buybacks is aimed at fixing prices rather than the reasons behind the elevated borrowing costs, and that includes the rising deficit and around $40 trillion in national debt. New research from Brookings shows a shift in who's controlling US bonds. During the great financial crisis, foreign ownership was dominated by official investors, central banks, particularly Chinese and Japanese central banks. As of mid-late last year, private investors have overtaken them. The former US Treasury Secretary Janet Yellen told me why this was significant.
Other advanced countries also have expansionary fiscal policies, large deficits, now competing with the hyperscalers that are issuing a lot of long-term debt to fund AI, a market that now has marginal buyers that are price sensitive and really want to be compensated for these extra holdings of long-term debt and are worried about the fiscal trajectory.
Gian Maria Milesi-Ferretti is a senior fellow at the Hutchins Center on Fiscal and Monetary Policy at Brookings and is with me now. Sir, I'm grateful. The article by Druckenmiller really goes to the absolute heart of everything and the criticism of what we've seen in the bond market this week, which is it is handling symptoms, not curing the problem, which of course is long-term debt. And that's one of the reasons that foreign investors are shifting their policy too.
Well, thank you for having me. We haven't seen a dramatic change in the behavior of foreign investors. I think we should not overstate their own reaction. But as Janet Yellen was saying, the mix of foreign investors has changed very substantially. And now they are investors which are much more sensitive to market conditions, a lot of hedge fund activity. These are very leveraged institutions. And when market conditions tighten, changes in behavior can be rapid and at times disruptive.
Why do you think that there has been this shift? Is it, I guess you can look at it one of two ways. Is it central banks and institutions buying less, or is it private investors buying more, if you see what I mean? It could be a bit of a combination of both. But is it one shunning and the other buying or not?
Well, let me tell you, the foreign investors fundamentally are reserve holders. And what has happened over the past 15 years is that US treasuries, US public debt has risen much faster than global reserves. And so even if foreign investors had kept a constant share of dollars or treasuries in their reserves, their role in the treasury market would have declined just because of the speed of increase in the US treasuries. And there were other factors at play too. The dollar went up, and that raised the value of dollar assets in their portfolio, and they want to hold shares that are roughly balanced, and that also reduced their desire to purchase.
But fundamentally, as I read what your views are, the fear is that these newer investors, I'm not trying to overstate it, but are more fickle. They are more likely to head to the door in the moment of crisis.
Yes, I think that is precisely one of the issues. In the past, we saw during the global financial crisis, private investors actually came in as global volatility rose, as the VIX, the indicator of volatility, went through the roof. That type of behavior we are not seeing anymore. Liberation Day was one case, but of course also March 2020 was another. So the risk is precisely that they will behave differently from before when times get rough.
Druckenmiller's fundamental point was, besides don't deal with the cause, don't just deal with the price or the liquidity, but his fundamental point was that the bond market will give a warning shot that the bond market is telling a message that needs to be heeded. The real problem with the US Treasury debt is there's always, I mean, I remember when they downgraded the debt from AAA. There's always a crisis, but there's never a moment to put it right.
It is, I think, the process of deterioration is a gradual one. And again, we don't see a rush for the exit. But the burden of higher interest payments is weighing on US public finances. And with 40% of treasuries held outside US borders, it is also weighing on US external accounts because you are paying interest, but you are paying interest to non-residents.
Right.